Thank you for joining us this afternoon for our webinar on auto enrollment. My name is Robert Whelan. I am Managing Director of Rockwell Financial Management. We are obviously hosting today's session, and we are hoping that by the end of it, you will have all your questions answered on all things auto enrollment. I'm delighted to say that I'm joined by a couple of experts. We have Brian Dwyer, who is Employee Benefits Manager here in Rockwell, and we have Angela O'Grady, who is co-founder and COO of the HR company. So as you can see, this is everyone here who's going to be introduced to you. So a little bit about Rockwell. So we're founded in 2013. We're based here in Dublin City Centre. We have been providing expert employee benefits since then to currently 173 companies and charitable bodies. We have an award-winning team of 20 staff who service over 5,000 individual clients, and we manage over 400 million euro in pensions and investments and various protection cases for those clients. We're obviously we have access to 17 providers, over 500 investment funds. This is our way of saying that we aren't tied to anybody. And lastly, it is definitely our mission to provide you, your employees and their families with an outstanding client experience based on the best advice, technology and people. So that's enough propaganda. Let's get into it. So first and foremost, what is auto enrollment? Well, auto enrollment is a pension scheme where employees contribute a set percentage of their income, matched by their employer and topped up by the government. The premise behind auto enrollment was to facilitate the expansion of pension coverage beyond the current situation in Ireland, which was mostly multinational companies and people working in the public sector. They are trying to identify the huge gap that does exist between what people will need to have a sustainable living in retirement and what the state pension is going to give them. So they're trying to bridge that gap. This seminar is primarily aimed at employers. So a lot of the questions, a lot of the topics today will be focused on the employer angle. And obviously it's really around the compliance for employers, the cost for employers, the maintenance, etc. But the premise behind auto enrollment is there. They're seeking to capture about 800,000 employees who are aged between 23 and 60, earning over 20,000 euros and up to 80,000 euros a year, who will be automatically enrolled if they don't already have a workplace pension. And as I said, it aims to supplement the state pension, which is currently 277 a week. The objective of this exercise is about educating employers about what could be a very disruptive process and hopefully trying to get ahead of it. So what we, in preparation for this, we ourselves did some research with Amoric, and it revealed that although 80% of people were aware of the upcoming auto enrollment scheme, only 40% said their organization was prepared for it. So having a pension plan in place before auto enrollment certainly helps to avoid the complexities and the compliance issues associated with the new regulations. And one of the key findings we found in our survey was 74% of, and these were employers, identified recruitment and retention as a major business challenge. And obviously, adding a comprehensive employee benefits package can help, but I don't want you to think today is around there's only one solution to auto enrollment, which is not to enter it and set up your own scheme. From our perspective, our premise has always been that it's about giving the right advice to the client. And for some people on this call, auto enrollment will make 100% sense, and we've no problem telling you that. For other people, it may be a question. For other people, it'll be a no-brainer just to do your own thing. Obviously, there'll be no definitive answers today. We're happy to engage with people afterwards, but please don't think we're not saying that there isn't a room for auto enrollment for people on this call. When will it start? So it has had more false starts than the Children's Hospital, but they seem to be committed to launching it on the 1st of January 26. So we're going ahead with that deadline. It's being renamed My Future Fund. I've seen some adverts on RTE recently for it, so that tells you they're obviously committed to launching it. And the premise being that everyone who isn't in an occupational pension scheme on that date will be automatically enrolled unless you already have a pension. All employees can, or anybody who is auto-enrolled, can opt out or suspend their contributions after 6 months, but will be automatically re-enrolled every 2 years. So what that means is that whether you like it or not, if you don't have something in place on the 1st of January, your payroll provider is going to be asking you to get set up with an auto enrollment plan because they want to be in compliance with the regulations. So you're going to have to put everyone into it. And even if the staff don't want to do it, and Angela is going to speak later to the challenges on the HR side and communication, etc. But they have no choice but to join. So However, there's a lot of staff, I'm sure they're saying at the moment, are going, I don't want to contribute, I don't want to start a pension. And as much as someone like I can say it's a good idea, they're still going to say I don't want to do it, and that's fine, but they've no choice. So they're going to have to join. Now, they do have an option to opt out, and it means that after 6 months contributions, they notify you and they let you know, I no longer want to be in the scheme. They opt out, that's fine. Whether they're working for you, whether they're working for someone else, it doesn't matter. In 2 years' time, they'll be re-enrolled. And again, they'll have the same process that 6 months into that, they'll be auto-enrolled. So what they're trying to do is, I suppose, as much as possible, nudge the public into engaging with this. It is mandatory for all employers to participate in the scheme as long as they're eligible, and we'll come to eligible employers in a second. And non-compliance can result in penalties and potential prosecution, and revenue are looking like the main people behind that. The next piece of criteria is salary. So any employee in the business earning at least 20,000 euros must be enrolled. So if you have any employees earning less than 20,000 euros, they are eligible to opt out and don't have to be opted in. And the eligible salary is up to 80,000. So if you do have people in your business and they're making, say, 100,000 euros, well, it's only the first 80,000 euro that's covered by auto enrollment in terms of contributions. If that all sounds a bit complicated, I'm sorry. I'll try and distill it, but the webinar will be available for everybody. We will be sending it out via email later on tomorrow, so you'll be able to hopefully catch up then if I was going a bit too quick. Next, so Budget 2025 set around the taxation of the scheme, and because there were some questions around that, so it's pretty much been aligned, and this is in terms of how our employer contributions treated for tax purposes. So employee contributions are very different than employer contributions. So the tax treatment for an employer contribution is, it's obviously, you can write it off against corporation tax, okay? The tax relief on employees is very different. It's very similar to SSIA's, and we'll come to that later in terms of the way it's done. It doesn't really matter what tax rate they're paying. It's a set rate of relief. All growth in the scheme will be exempt from tax, but that's the same as any pension scheme. And auto enrollment funds will be taxed on drawdown, other than 25% of the fund, which is paid as a lump sum. Again, this is all very much in line with all existing pensions in Ireland, and the usual rules apply in terms of the first 200,000 euros is tax-free. There is a whole new tax regime for auto enrollments or contributions paid from taxed income, but more to come on that. Not really a concern for today. Okay. How is it funded? The scheme is funded by contributions from employees, employers, and the government, and it's effectively going to be phased in over the next 10 years. So by the year 2036, the objective is that everybody in the country who is in an auto enrollment is paying at least 6% into their pension scheme. Their employer is contributing 6% into the pension scheme, and the government are topping it up by a third, so by 2% in that case. So you'll see here, it starts off in January 26 at 1.5%. So it's 1.5% of eligible salary from the employee. So if you have an employee on 40,000 euros, that's 600 euros a year or 50 euros a month. Okay, and that's for the employee. The employer has to match that, so that's 600 euros a year or 50 euros a month. And then the employee gets a top up from the government of a third of the 50 euros, so 17 euros roughly. Okay, government contributions start at 0.5% of the employee's salary and increase to 2% over the 10-year period. And contributions, as I said, are capped at 80,000 euros of gross annual salary. So again, if someone is making 90,000 euros, as if it wasn't complicated enough, your payroll are going to have to make sure that they're allowing for only the 80,000 to be covered by the auto enrollment for both employer and employee contributions. There are HR considerations, and that's where I'm obviously going to pass you over now to the HR expert, who is Angela. But before I go on, we do have a questions and answer session at the end. Please, there's buttons there, post any questions, use the chat function. We will get to as many as we can. If we get overwhelmed, what I will do is a follow-up kind of video where I will answer a lot of those questions to video, and we'll send that out as well with the rest of the content. But for the HR piece, I'm going to pass you over to Angela.
Thanks, Robert. Thanks very much. Good afternoon, everybody. I suppose there's three aspects really from a HR point of view that employers should have in place. The first one, possibly an Excel spreadsheet, or if you use a HR database, to have your date of births lined up, so that will flag to you then who is eligible to go into the auto enrollment scheme, as in when they're hard, or if they're hard under 20, obviously it'll flag that then when they reach the age. So that would be important to have that in place. The second thing would be, I suppose, just from a reassurance point of view to staff, maybe to set up some workshops with a pension provider like Robert and his team, just to have transparency of information and I suppose a bit of reassurance so they don't panic, etc., etc., because some will, given the outlay, and they may say, well, I can't go into this, as Robert already outlined, that they can't afford it, or the cost of living, etc., etc. That'll present challenges, perhaps. So the workshops provided by an expert, in my view, would be critical. And to line those up in groups, maybe depending on the size of your organisation, split them into mornings and evenings, and split them into teams for Robert and his team to come in and speak to the staff involved. Sometimes it's almost easier to get a third party involved there, so they have the expertise in full. The third thing then is to have the contracts for employment all up to date with regard to the auto enrolment. It will have to be a clause in the contracts for employment. With existing staff, we'll be issuing a contract amendment to add in that particular aspect, and then with new clients, it'll be in the master contracts from the outset. We'll possibly add it into the handbooks as well, so it'll be there on two sides, the contracts and the handbooks. And then I guess if people do opt out and they leave, and then they might come back in later years saying, well, what was my fund there at that point? I suppose the tracker then is key there as well, so you have information at your fingertips to track that data as time goes on. So that's kind of it in a nutshell from a HR point of view, not as complicated as things normally can be within HR. So yeah, thanks, Robert. I hope that kind of gives a brief summary.
Absolutely, and I thank you, Angela. That was brilliant, and it's great to have the expertise of Angela in the HR company, because they're at the coalface there, and this is primarily affecting SMEs, let's be honest. So very few multinationals are going to be worried about the impact of auto enrollment. So having that expertise on the HR side, and because it's something our side, we obviously put the money and the client and what happens with the fund, but you have to actually implement it on the ground, and it's important to think of those things, particularly the legal piece, as employers, as we know. So other considerations for employers, just to draw your attention to it. On administration, there is an increased burden on existing finance and payroll function in the business. There's no way around it. There's going to be potential complexity. You may have no choice, for instance, based on your own research or talking to companies like Rockwell, to have a company pension scheme for a certain segment of staff and auto enrollment for others. And whether you like it or not, that is going to add complexity to what can sometimes be an already complex process for people in payroll and finance. And the opt-in, opt-out, client of mine described it as the hokey-cokey, and they're not wrong. So in terms of your own administration, as Angela said, keeping records is incredibly important, particularly when it comes to reconciling contributions, etc. On the finance piece, ultimately it's cost on business, and this is why the likes of IBEC and the SFA have been quite vocal about its implementation, because it is automatically adding the payroll costs. So outside of whatever you may do for your staff in terms of increases in wages and pay, it's an automatic increase in January 2025, and again in January 2028, and again 3 years later as part of the rollout over the next 10 years. And finally, the enforcement piece. Like, I've been on numerous webinars like this with providers and state bodies, etc., and they're at least talking a good game in terms of enforcement. So they are very serious about making sure that this is rolled out across the country as quickly as possible. So ultimately, it's just being aware of what now they haven't clarified, to be very honest with you, what exactly the penalties would look like or what enforcement actions would look like, but they are saying that they will be prepared to take them if employers don't comply. But I think it's fair to say that there'll be a degree of reasonable consideration on initial rollout anyway. So that kind of takes the piece of kind of auto enrollment where it's at. As I said, if you have questions, there's a lot of detail, folks, so we're very conscious of that. So please ask them, we'll come to them. And just finish off just by kind of giving you the benefits of a group pension scheme, because to be fair, it's the number one question we get answered as well. If I don't want to use auto enrollment, then so for instance, I like to contribute more than 1.5% into a pension for my staff. Is auto enrollment suitable for that? No. My staff would like to contribute more than 1.5%. Is auto enrollment suitable for that? No. So in those scenarios, most people, particularly because it's a tight labour market, are probably using auto enrollment as a jumping off point to actually say, you know what, we've put this on the long finger, we're just going to do it ourselves. So the benefits of a group pension scheme are first and foremost, it gives you a competitive edge because you're standing out as an employer of choice by providing a competitive and attractive pension plan. It does lead to enhanced employee loyalty and retention. Every survey you see coming out from any major body will tell you that employees do value these types of benefits. And the difference between setting it up yourself, and particularly business leaders and owners, is you get to control and customize what you want, because auto enrollment is very much a one size fits all. So by taking control yourself, by setting up your own scheme, you have complete control over the contribution size, the contribution rates, the provider, the normal retirement age. There are a number of benefits to actually having it yourself rather than dealing directly with the government scheme. And they would be the main three from an employer's perspective. Cost control as well, because what the government have basically said is that even if the auto enrollment eventually gets up to 6%, an employee that's contributing, say, 5% in 10 years' time will still not be compelled to join auto enrollment. The eligibility requirements are that you just have a pension scheme in place that both employees and employers are contributing to. They haven't actually specified a percentage. Okay, so that's a good thing. And if you have a situation where you have a significant group of staff in the top rate of tax, there's no easy way of saying it. They're far better off making pension contributions to an employer-sponsored scheme than auto enrollment, because the tax relief is significantly better. But we'll get into that at a later stage. So I kind of just said I'd give you the kind of two different retirement savings systems. So you're looking at the new auto enrollment due January 26, lower contribution rates, no tax relief. Instead, it's a government top-up, and the opt-out. So we'll send these slides around, as said, as well. So it's just more a little handy little page and a ready reckoner for you. But the bottom line is, versus doing it yourself on the right-hand side, the current defined contribution system, there are higher contribution rates for employees. You get tax relief at your marginal rate, and you have much more flexibility, both as an employee and as an employer. Okay. So from Rockwell's perspective, what we offer employers is a dedicated operations team on hand, led by Brian, to provide your business with day-to-day guidance. We, as I said, over the years, we've accumulated since 172 today, and various different industries, various different sectors, various different sizes, including a number of charities. So a huge amount of expertise here, and because each business is very different, it's about finding the right fit for you. So having that expertise will hopefully lead to a better decision. We are there. It's an incredibly laborious process sometimes for people getting up on board, up and running on pension schemes, but we have it pretty slick internally now, and we make it as painless as we can. And in terms of monthly reporting, payroll function, making sure the contributions are reconciled, etc., that's really what Rock and others, to be very fair, should be doing for you. And the compliance assurance is there because ultimately this will be part of, from our perspective, this is where revenue will be checking and seeing, are all employers complying with the legislation, and making sure that appropriate contributions are being made when they're supposed to, because that is a huge issue for revenue in terms of employer pension contributions. So from our side of it, we do believe in best-in-class member engagement. So this is a very much employer-led seminar, because it's the employer who's going to be the most impacted initially and has the most questions. So what we want to do is to smooth the journey for you, but also we want to make sure that your staff are getting a great service. And again, we wouldn't have grown our employee benefits business to the size it was if we weren't delivering on this, but we do prioritize engagement. So we would do annual reviews with the staff, make sure they understand when they're being onboarded about risk, and we make sure whatever pension fund they choose, whatever investment avenue they go down, that it meets their risk tolerance. There is no one size fits all. And we are big believers in financial education, so we'd regularly run workshops and seminars for our employee benefits clients, educating them on things like understanding their pay slip, understanding how to do a tax return, and the basics of investing, stuff like that, which we get great feedback on. And finally, we're a big believer in giving people access to the information themselves rather than always feeling they have to go through us. So there is, whichever provider we use, there are portals available where all members of staff and obviously the employer will have easy access to be able to get the information they need. Quick slide just on the tax relief, just to explain it. Like essentially, and it's really for people who are going to be in the top rate tax. You'll see here that if you're making contributions today into a pension and you're a top rate taxpayer, if you look at the far left there, for every €100 that goes in, it's costing you effectively 60, with tax relief of 40. Under auto enrolment, the same €100 is now costing 75 because the state top up is set as a third of yours, of the employee's contribution. So it's only €25. So you can see straight away, a top rate taxpayer is obviously disadvantaged. But a 20% taxpayer is going to be better off and under auto enrolment. And that's part of the justification why they harmonized it under auto enrolment. So for €100 going into a pension for someone paying tax at 20%, the cost to them out or net pay is €80 with tax relief of 20. Okay, so you can see there in terms of the return, the way we mean by return in terms of the increase in your fund versus the cost out of your pocket. So what if you already have a group scheme in place? And this has been certainly a lot of the work we've been doing with our own clients over the last 18 months. Well, if your workplace already has a pension plan, you're in a very strong position. Existing schemes will coexist with auto enrolment, ensuring compliance with the new regulations. What we have been doing is working with employers and getting as many of the staff who aren't already in the group scheme into the group scheme, because most of the employers we've been dealing with are trying to avoid having two schemes where possible. And so we've been working closely with them in terms of getting those people who weren't already in the scheme into it. Anybody who's in the scheme already is completely unaffected. They don't have to worry about this. Anybody who's making a PRSA contribution via an employer-sponsored, an employer payroll system is excluded. So what we're trying to do is kind of steer employers where possible into only having one scheme, which is their own scheme, rather than being compelled to use two. But as I said, in some instances, it's been no choice. But that's obviously our job, is to give you the right advice on that. And we do have a readiness check. So there is, as I said, there is no, unlike auto enrollment, there is no one size fits all when it comes to these things for our side of it. So it's really just about when we're dealing with anyone who gets in touch with us, we will do a readiness as to where you are, and it all comes down to then our final recommendation as to whether you set up your own scheme, broaden your own scheme, go entirely with auto enrolment, or a mix of both. And so that's our promise to you. So that leads me nicely on to the most important part of the day, which is obviously questions. So Caoimhe, can you jump in there and help me out in terms of any questions?
Yeah, no problem. So we have plenty of questions coming through there. So I'm not sure if you want to navigate yourself to the question section, or if you'd like me to read some out for you.
No problem at all. Yeah. So there's a lot. So what I'm going to do, guys, is yes, the slides will be shared, absolutely, and the full webinar will be shared. So the question here about the 3 staff and business criteria, it's not in any documentation. It is on what we've received, to be fair. So I'm happy to share what we've got on that with you and send links. If an employee is paying into a private pension themselves, are they still eligible for auto enrolment? The answer to that is, and this is going to really drive you nuts, probably not eligible for auto enrolment if the private pension has been deducted from payroll. So if you're facilitating that deduction from your payroll, the guidance so far has been that they're not eligible to join auto enrolment. Let me see here, if any else. If you have an existing PRSA scheme in place and employees choose to join before AE, what is the minimum employer contribution required? It's a great question. None. So as I said, we're guiding at least 1% just to kind of keep everything sweet, but there has been no guidance per se on a particular percentage. So we're just kind of ourselves come up with this figure of 1% because it's a contribution, so therefore meets the requirements. But obviously you can pay what you want. With PRSAs, there are obviously different contribution rates for employers, but I hope that answers your question. There is no set percentage that you need to worry about. Question here, can a person over 60 be part of a scheme? No, I know that sounds terrible, but true. Question here, is it the employer's obligation to give employees information on their fund and contributions, or will this information? It is not, no, absolutely not. It is the employer's obligation to facilitate a deduction at source facility to make contributions to the scheme, but ultimately all communication, because the scheme is being handled directly by the state, they have appointed a third-party provider called Tata. They're going to be based up in Donegal. So the relationship in terms of on the administration and the direct communication, everything to do with the scheme in terms of fund size and performance and all that will be handled directly by the employee via a portal, but between themselves and the scheme administrator. No, absolutely not. There's no, well, again, so far, there's no burden, okay? And finally, because I know we're conscious of time here, and I will go through the rest of the questions, guys, and I promise I'll do a video and answer them. I'm just conscious of time, but including charity organizations, yes, absolutely, very much so. So again, because I said we work with a number of charities ourselves, and they've had to comply. So that kind of brings today's webinar to a close. I really appreciate everyone engaging, and the questions were great. I promise anyone whose questions I didn't get to, I promise I will answer it. And we will share these slides, we will share the content of the webinar. And obviously from our perspective, if you feel there's something you'd like further advice on, there will be a questionnaire going out. You fill it in and we'd be delighted to help you if you can. I'd like to thank Caoimhe Pollard from Rockwell today for organizing it and doing all the tech. And obviously my colleague, Brian Dwyer, who I totally monopolize the speaking time. And when he does speak, Brian, say hello.
Hello, and thank you for monopolizing the time there, Robert.
And obviously Angela O'Grady from the HR company. So thank you all. Have a wonderful afternoon. Take care.